It is really a case of more of the bears. The NSE All Share Index is down 0.4% to 36,248 points, and for the month it's now down 4.4%. So August, not a good month for equities, regardless of the fact that we did see quite a few results come out, particularly from the banking sector. Not all positive, but I think overall there is some concern about where the market goes from here. Some concern around the Naira, which has weakened a little bit as well. But on the day, we did see the likes of Costain, West Africa, Deep Capital and Evans Medical among the losers. Joining me in the studios to talk through what to expect going forward is Chukwuma Anyanwu, his head of research at Morgan Capital Securities. Chukwuma, thank you very much for joining us.
Thanks for having me.
So like I mentioned, pretty bad month.
Yeah,
August, I think a lot of people expected it. Or should I say a lot of people thought the market would trade sideways. Not much to get it going. Of course, the MPC kind of shocked the market in terms of the expectations going forward. But overall, what's your take on how the market is trading?
Well, for me, it was actually pretty surprising. The most significant news item for the month that has dictated how the market has traded so far, I think, is the CRR hike.
Yeah.
To 50%. I think it dampened the expectation of people with respect to banking stocks, and I think the market trading sideways or having seen some bearish run is largely on account of the fact that people's sentiments towards banking stocks has declined significantly.
Right. And so what's your sentiment for banks going forward? Are you one of those that thinks we're less bullish now, or do you think it's all still a valuation play that banks is still where you want to be if you want to be in equities?
Truthfully, Wole, I think the objective thing to do is size the effect of the CRR with respect to how the banks are dealing with it. Yeah. And that will largely come true when we say third quarter numbers. Right. So I think pretty much investors are adopting a wait-and-see approach. They are not taking up, I think a lot of the banking stocks are trading at some discounts. I still think that any bank has value, even though we've revised our expectation downwards. But I think
is that what you've done across the board?
Yeah.
That CRR
pretty much, yes.
Impact.
We've done an extensive study on with talking to the top management of some of these banks, and our expectations generally coming through from a valuation viewpoint. I think a lot of these banks will take some hits, some varying on the size of the bank. Yeah. So I think some of them will take some hit. I think some we've revised our expectation from a buy to a neutral, some to a hold, right, and some to an outright sell. Right. So because I think the impact of the CRR will come through by third quarter, and like I've always pointed out, Wole, I'm very interested in the strategy adopted by the management of these banks to mitigating the effect of the CRR.
What really can they do? I guess the CRR impact is public sector deposit. Yeah. It's something that a lot of banks have been interested in the past, but now I think if you look at the banking sector right now, the big challenge is lending. If you look at, for instance, the AMCON-owned banks, a lot of them have very low loan-to-deposit ratio. So the potential to lend is there. There's no doubt about it.
Absolutely.
The big question is, how do you lend in an efficient manner? Exactly.
The truth is, when people say the effect of the CRR is a problem, if you see the exposure of some of the banks, you see some to public sector funds, you see some of them as low as 10%, 5%, 6% across board. The truth is they've not been lending. I think that's where the problem is. And from our view on Zenith and some other banks that we've looked at, I think if you see a bit more aggressive move with respect to their loan books, you see some
conservatism that we've known some of these banks.
If some of them ease up a little bit more on how conservative they've been towards extending credit, I think we'll see. We pointed out on our review of Zenith that we're wondering whether it was going to be a catalyst or a clog, because the truth is it can actually be a catalyst for some people to redefine how the market. Exactly. Right. So for us, that's a key strategy towards playing the market going forward.
How aggressive, how bullish are you about the rest of the year? Where do you see this market heading? Is up only about 29% at this point.
Well, the truth is, by the time the year-end activities start kicking in third quarter, the reality is on ground. People know what to expect going forward. I see some rally in the market. Some banks are really, really trading at some discounts. Yeah. You can't really, they are compelling. Right. And the truth
that will be more compelling than
when you see a compelling buy, whether or not there is favorable market sentiment towards that stock, it's still a compelling buy. So in the long run, valuations with respect to fair value of companies would always win.
Right. So which are your top picks going into next week?
Only we're looking at Total. I've kept emphasizing on the fact that I think it's a diamond in the rough. It has sector-wide issues. We've seen some clog in the sector, growth-wise, with respect to revenue.
Yeah.
But I think at 157, which is currently the price for Total, is still a buy. I see Total trading at about 190 before the year-end 2013 results are released.
Beyond Total, what about in the banking space? Which stocks do you like there?
I still
You've
think
been talking a lot about Zenith.
Yeah,
You're aggressive on Zenith?
Yeah, I think Zenith it's a good buy at these prices. I think GT is also a good buy, at these prices. Pretty much I'll be safe on that score.
What's your view on the non-financial, the likes of the breweries, and maybe even the cement stocks? Dangote Cement, of course, it has been in the news. And perhaps that's one bright spot in this whole earnings season. Dangote Cement has still been in line with expectations in terms of its performance.
Well, not just Dangote Cement. I've been one key advocate for the purchase of Dangote Cement. I think there's value in that stock. Right. But I also think there's value in Lafarge. I think Lafarge will trade at about 110, being conservative. I think conservatively, Lafarge will trade at about 110. The sector fundamentals are sound.
Right.
I think the fact that Nigeria has infrastructural inadequacies that we've not dealt with yet portends a great opportunity for companies in that sector. So,
how closely are you tracking these companies that, of course, are investing into the power space, the likes of Transcorp, Forte Oil? Has that changed your view of those stocks, or is that something that you're just watching for now? Yeah,
Wally, we've seen a lot of forward and backward movements with respect to policy changes in Nigeria. So I think it's a big catalyst for earnings for the companies that are exposed to it, Transcorp, Forte, and the likes. I think it's a great opportunity for them to maximize the potentials of the stocks. And I think for them, looking at for investors who want to bother with looking at taking a forward outlook on these companies, I think they're also fair at these prices. I think it's a